So, should you invest your property in a company structure, a trust structure, or in your own name? So let's unpack that and also touch on the very popular trust company structure in South Africa. So let's get started. Firstly, if you want to register a property in your own name as an investment property, you can do that. And it can also be to your tax advantage. Why? Because firstly, the property, when you sell it in capital gains tax, it would make sense for you because, well, if you sell it in the next 5 or 10 years, right? Because you are going to firstly get a 40,000 Rand tax break. So the first 40,000 Rand of your investment property money that you've made, the profit, the proceeds is tax-free. Also, the 40% on top of that will be taxable, which basically would be taxed at your normal tax rate. So if with your job you're currently paying 45%, then you'll pay 45% of that 40%, which would work out around about just 20% of your profits that you've made minus the 40%. If you had that in a company, on the other hand, every single cent will be taxable. So you don't get that 40% tax, 40,000 Rand tax break, which is sort of important, right? I mean, this 40,000 Rand can go a long way, especially with smaller properties. However, there are also a couple of good things when it comes to companies. So with company tax, what you'll find, it's a flat rate of 27% as of this moment in time in 2024, which would mean that any profits is taxed at 27%. So if you are a sole proprietor, the property is in your own name, it would mean that any profit that you make, including rental income, will be taxable at your normal tax rate, which could be anywhere between 18 to 45%. And if you're in the 38 or 45% bracket, that 10% can make a very, very big difference. So many people that have a company, what they would do is they would take the property, put it in a company, and then leave the money there. So the money can grow in the company without that extra tax burden. And that makes absolute sense, right? Because then you basically save on that tax, and when eventually you need the money, you can then go and, withdraw it as a director or the work that you've done for the company. So it can basically grow in this little world outside of yourself. Obviously, a company is an entity outside of yourself, so there are fees involved in auditing, tax, and other things, and making sure that your CPIC company doesn't get deregistered. So there's quite a bit that needs to happen. However, it can be extremely profitable, especially if you want to scale your property business. Now, let's have a look at trusts for a minute. Trusts are taxed at 45%, which is a lot of money. So you can imagine if you've got a property giving you 10,000 Rand a month in profit, 5,000 Rand a month is profitable. However, a trust structure is structured in such a way that you can actually give that money over to a trustee. So for example, to a beneficiary. So how it will work is that you've got trustees that manages the trust. Remember, it's a separate entity from yourself and your family. So you'll need an external trustee. So the trustees will manage that, and the beneficiaries are the people that actually then get access to any proceeds from the trust. So that would mean, for example, if the trust is making 10,000 Rand from a investment property, that money can be sent then directly to the beneficiaries, and they will get taxed depending on what type of income that is. It keeps its form of income. So for example, if it is by capital gains tax because the trust sold something, then you will need to pay, then the beneficiary would need to pay capital gains tax on that money. Or it might be that that person, that it's rental income, so it'll be part of your normal taxable income that you get. So that can make sense if you've got a couple of people and you're spreading it out evenly across the board. However, if you leave that money in the trust, it could be quite detrimental to your health. Probably a heart attack, probably going to die because it's a lot of money that you're going to lose. Okay, so let's do a comparison now. If you have a trust company and your own name, if you have it in different places and it's difficult to manage. But if it's a trust, as I say, tax is more, company tax is less. However, selling a company is really simple. Selling a trust, well, you can't sell it because it's more seen like it's not a natural person, but it's a separate entity. But what you can do is you can take a lot of money for whatever reason, you can speak to a lawyer about, and then put the trustees on somebody else's name. So let's give an example of where you would want to do that in a trust structure. You've got your primary residence in a trust and you've got a couple of properties in a trust. You want generational wealth to go down to your kids. And that would absolutely then make sense, because what you're going to do then is you're going to say, I'm going to take the money and I'm going to take the trust and I'm going to make other people trustees, and when I die, it is just going to my children is going to become trustees and beneficiaries. Remember to have your own external trustee. It is extremely important. If you don't, it becomes fairly problematic. So, and for generational wealth, a trust structure is really good, because if you die with a company or your own name, then you're going to have to pay transfer fees and bond and transfer fees and other fees, estate duty, estate tax, blah, blah, blah. And a quick calculation that I did recently for someone was basically that it is about 10% of your estate is payable for your for all of the fees, anything about 2 million rand, but less for anything below that. But it's a small fortune. It's quite a lot of money. So for a trust, it makes sense for generational wealth. For a company, it makes sense if you're going to sell the company and you're going to take your profits from your investment portfolio, rental property investment portfolio. On the other hand, in your own name, if you're going to sell it in the next 5 or 10 years, or you don't have a huge portfolio, that also then makes sense. However, obviously, you know, some people I've had that bought a 10 million rand property, and it is being rented out for short-term rental, and they are making a small fortune from it. And having it in their own name is extremely taxing, because they're in the 45% tax bracket. So obviously, chat to your magical people around you and a property expert, a property practitioner, or and a property lawyer or generational wealth expert if you are starting to grow beyond just the simple single properties, you know, sectional title, mini flat in horrible areas that you're investing in. Not that I'm saying they're bad, I quite like them, but it is extremely important that you do that. Okay, so which one should you choose? Well, what about a trust company structure? Going that for a second. So a trust company structure works like this. The trust owns 99.9999999% of your company, and you own the other 0.000000001%. So it's not fully owned by the trust, it is owned by a little share of you and about the trust. So basically any profits that can be made will be sent to the trust, which then can be paid over to you. So generally this is used by politicians and many other people as well, because it is absolutely almost no liability. You know, they get so little liability that if they get sued, it basically goes back to the trust, and you can't touch the person's wealth. So in a property investment sphere, that absolutely does make sense if you want to scale your property portfolio to a much larger thing. I would say, in my opinion, more than 5 properties if you're using section 13.6. Check the comments below for the description below for the link to that article. And if you want to scale it up more than that, it does make sense to start thinking about a company trust structure. Yes, now you need to remember that our fees payable, it costs money to have a trust or have a company. There are accounting fees, there are tax fees, and those can eat into your profits. So these are not for smaller things. However, in the long term, it can be extremely profitable. Don't forget to subscribe to my YouTube channel. Click the little bell to say that you want to receive notifications, and also check out my blog and my newsletter.